Welcome to the ASX edition of Trade the Trend, a weekly video about where the stock market is going. This video is going to focus on the ASX 200. I'm also going to have a look at gold, uranium, and silver. So make sure you stick around for that. I'm going to cover the S&P 500 in a separate video. I'll leave a link for that in the description section below. As always, general commentary doesn't take your personal situation into account. All that said, let's get into that first chart. So we've got the ASX 200 up on the screen, and it's been another week of oscillating either side of this moving average. We've got the 50 and the 100-day moving average, and last week we had a nice rally getting above those averages, and this week we're back down. So it's been this constant seesaw of the market moving either side of the averages, and I know how frustrating these periods can be. And they do happen, and they are frustrating, and they wear people down. I had one person on the YouTube comments last week just tell me that, going, yeah, hey, this is all, everything's rubbish. This ASX 200 is never going to break out. And the feeling that people get around these things, look, I get it. I know what it's like. I sit through these as well. I like trending markets. These sideways markets they're a real grind. And the one thing we can be sure of, though, is that these sideways periods of price action, they always end. I don't know which way this is going to break, whether it'll break to the top side or the downside, but I do know that at some point we will get a break and we will get a market that trends. It happens every time. What we're seeing now is not new. I'm going to show you a couple of past examples where we have seen price action similar to this. And we don't need to go too far back to find the first one. So this was in 2020. It was just after the rebound from the COVID low. So we had a strong rally, not dissimilar to the strong rally we've had earlier in the ASX 200. Then we went through a 6-month period where the market just went sideways, either side of the moving average, and it was a difficult period. Then the market broke, and the rally got back into action. We got some more good trending conditions. Going back further, this one goes back to mid-2017. And again, it's another 6-month period or thereabouts where the ASX 200 just was either side of that moving average. I remember this period, it was just miserable. There were few stocks were triggering entry signals. Everything was going sideways. Everything was stuck in the mud. It was a dull 6 months because there wasn't much to do. For people who are fascinated by the stock market, there wasn't too many fascinating things going on. So let's just go back to present day. As I say, this frustrating period is going to end. I just don't know when. So we just got to wait it out. We've got to wait it out until we get a break one side or another, and then we get follow through in that direction. I think we can still get an upwards resolution from this range, but time will tell whether that actually occurs. Support's down here at 7,050, and then we've got resistance up here at 7,400 thereabouts. They're the points to keep an eye on. And until we get a breakout, I'm not in a hurry to do a whole lot. As I've said last week and several other times, it's on a case-by-case basis for me. I'm still buying and selling stocks, but but the entries are fewer and further between. It's because there's not a lot of stocks giving those good momentum-based buy signals at the moment. Now let's jump over and have a look at the Small Ords. It's interesting developments in this. We have this resistance band coming in here at around 2,850. Market rallied into that last week and wasn't able to get through. I've now had a reaction down from there. It's really interesting just looking along here, and you can just see, like, I've had this drawn in here for quite a while now, and you can see like people who go, oh, look, what's this support, what's this resistance stuff all about? Surely that really doesn't mean too much. But you can see the it's a technically active region, and whenever the market is in this space, it is causing a reaction either way. So what we've got here on Friday, we've got this market continuing to sell off. got two trading ranges we've been looking at on this, the green bounded range being the larger one, and then this smaller blue bounded range, which has been in place since around March. Currently heading down towards the lower boundary of this blue range. So this is quite an important moment. Is the Small Ords going to find support down at the lower end of this smaller range and rebound, or are we going to get a breakdown? A breakdown does still keep it within this larger range, but it would definitely be a warning that there is weakness coming into this market. Maybe my thoughts that the ASX 200 can have an upward resolution from its range. Maybe I'm wrong on this. Maybe, look, we've always got to be aware of the possibility that things can break down. It's I've been showing you a couple of examples over the last few weeks about stocks which have really come apart. Chalice Mining was the last one I spoke about. And that's the sort of thing we need to be aware of when we see indices like the Small Ords below its moving averages, and then also the individual stocks below their moving averages, not being able to bounce from being below those averages, and then that makes them vulnerable to larger falls. So I think if we do see this lower trend line break, I think it just means extra vigilance with portfolios. Know where your stocks are in relation to their moving averages. Know where exit levels are. Some of these debacles I've seen in stocks recently have been avoidable if you've had an exit strategy. But the people just sort of hold, hoping things will get good. It can really become an expensive exercise. So let's watch this as the next level on the Small Ords, but also let's know where our exit levels are, where our exit strategy is for stocks within our portfolio. Now, if you're getting some value from this, please hit that like button. Please leave a short comment. Just, hey, thanks for the video. Just tells YouTube that you're watching and you're engaging, and YouTube will show other people, which helps me a lot. So please do that and hit that like button if you haven't already, and come over to Motion Trader and check out the stuff I'm doing and see whether that could help you manage your portfolio better with new entry ideas and also that exit strategy, that all-important exit strategy. Now, let's get into a few commodities. So I'll start with, let's start with oil this week. Oil's an interesting one. Haven't profiled it for a while. It hasn't been doing much. It's been sort of like stuck in this large basing formation, or what now looks to be a large basing formation. There's a large longer-term support zone that comes in around $65. You can see this stretches back for quite a way. And oil has found support around there during the middle of this year. Had a rally. Moving averages across. I've got the 50 and the 100-day moving averages. And I've also got this drawn in this resistance band, which was resistant at around 84, which we just broke above. Oil broke above last week and into this week. So we now have breakout above a resistance band and what looks to be a basing pattern. So interesting times in oil to see how this goes. 10-month high, thereabouts. I think it's a 10-month high there now in oil. And yeah, whether this can maybe consolidate above the breakout and continue higher. It's one to watch. It'd be interesting to see how the oil-related stocks perform over the coming weeks. Let's jump up to up to gold. Jump up to gold. And price action this week has been constructive. It's we remain in this. It's actually coiling. It's the band is tightening up. Whether this will be the final sort of part of the consolidation before we get some real movement, I don't know. But at the moment, we do have this coiling structure. It's constructive. It looks corrective. No imminent sign that we're going to get a break either way. But look, I think gold remains it remains a commodity with significant upside potential, and we're just really waiting. We're waiting for the price action to tell us that if the next move up is coming, when that may be starting. Gold stocks remain a mixed bag. My best gold-related investment is in gold and Aussie dollars. So if we just look at Aussie gold, let's just click to that, and you can see Aussie gold is up near all-time highs. It's been going quite well. I've spoken about this in the past. I spoke about the breakout when it happened from this big trading range, which you can see here. The classic initial run, the return move. Now we're getting a rally again. above the moving averages. Aussie gold looks good, so that's been a mainstay in my portfolio for some time. Now going across to quick look at silver. Really interesting. This range has really taken shape since we first spoke about it, I think 2 or 3 weeks ago. And so we've seen the rally up to the top of the range, and now we've got the rally back towards the mid to lower end. A bit like the ASX 200 in that it's oscillating either side of the moving average. It's going to be an interesting one to watch. Will we get a break to the top side or the downside? I would favour the upside, but look, who knows? We need to watch and wait. What the US dollar does is also going to be an interesting factor. So yeah, I think silver's a really interesting one to keep an eye on. And let's just go and we'll finish up with uranium. So uranium has had another really good week. It's the rally continues. It's looking strong. It's this is the Sporot Physical Uranium Trust that I'm looking at, and it's actually made a new high in the last week. From a near-term perspective, I think it's stretched above the moving averages. I know I said that last week from lower levels. I thought it was stretched, and it's continued to become even more stretched. So I remember this with gold a while ago. I kept saying that gold was getting stretched. It wasn't an asymmetric entry point, and it took a few weeks. But then eventually that rubber band got so taut that the price did pull back. I suspect something similar will happen in uranium, that it will get some sort of consolidation, and then maybe that leads to another asymmetric entry level for establishing positions or adding to positions. I'd rather wait for a pullback to do any more buying in the uranium space. But I'm certainly not selling any of my uranium positions. I'm not taking profits. For me, it's all about, I want to let these, like this is a big range that uranium's broken out of, and big ranges can lead to really large moves over the space of a year or two. So I'm not looking for short-term take profits. I'm going to risk giving a gain back and try and stay on this overall trend. That's where I think the big money is made. One of my core holdings is this ETF. It's the Sporot Uranium Miners ETF. This one's listed on the New York Stock Exchange. It's also a local. There's an ASX listing as well, although it doesn't have the liquidity. Is not really there. I've held this for a while. I've held this since it was just on Christmas Eve 2020. Thereabouts when I bought it. So I rode a good upward trend, and then it's been staying with this large pullback. It's like, in hindsight, it would have been great to have sold and then rebought, but you never know how these pullbacks are going to go. It stayed within the bounds of what I was able to sit with after such a large rally. And now we've got this large rounding bottom formation in place, and we have the price now starting to lift off again. Moving averages across the 50 above the 100-day. And it looks like one of those ones which could continue to trend over the months ahead, and it's one of those ones which has the potential to trend quite nicely over maybe a year or two. But that's only a possibility. You never know what's going to happen with these markets. So as I say, you've always got to watch the price action as it develops. And we're also now up to a 1-year high, so that's another positive factor for this ETF and the uranium space generally. So look, let's call that a wrap for this week. Hopefully that's it. That's been interesting. Thank you for joining me, and I look forward to coming back and talking to you next week. Until then, bye for now.